Hi, I'm Ed Baldwin with your weekly wrap-up for Friday, July the 8th. Well, the markets attempted to find a foothold this week, with the corn and wheat markets finishing higher. However, the oilseed markets, canola and soybeans, still struggled to reach positive territory, weighed down by the losses in the vegetable oil and crude oil markets. The equity markets are showing a little strength this week, but are still also weighed down by the rising interest rates and fears of a recession. Our November canola contract this week was down $23.40 a ton, and it closed out at $855.10. The canola was down again this week, with the overall weather across the prairies looking non-threatening as canola starts to flower. The crop conditions are improving, and that is weighing on the market. The soybean contract, well, it had a burst of strength today just to push itself into positive territory, but only by 2 cents a bushel. So they finished up on the week 2 cents, closing at $13.97. The December corn contract, well, it was up 16 cents a bushel, closing at $6.24. The December Chicago wheat contract, well, it was up as well. It was up 44 cents on the week, and it closed just over $9 at $9.07. The December Kansas wheat contract was up as well. It was up 32 cents for the week, and it closed at $9.54. And our December Minneapolis spring wheat contract, well, it was up as well. It was up 39 cents a bushel over the week and closed up just over $10 at $10.01. The wheat was up this week on technical buying and profit taking after this recent sell-off. However, limiting the upside will be the strong US dollar and the good spring wheat crop conditions. Our Canadian dollar this week was down marginally. Well, it's down almost half a point. It was down 44 basis points and closed at 77.17. Leading the dollar lower was crude oil. It lost $3.81 over the week and closed out at 101.58. For next week, well, now that the planting and seeded acreage reports have come and gone, the trade will turn their focus to the growing conditions. And at this point, they are looking good. Now, while there may be some areas that are struggling with either too much or too little moisture, the overall conditions are pretty good for crop development. So, with that in mind, we'll look for canola to continue to struggle in this $830 to $900 trading range, with the pressure to the downside. For wheat, well, we did get a little bounce off the recent lows. However, there is little support for higher prices at this time. So we'll look for spring wheat to trade in this $9.40 to $10 range, with again the bias to the downside. I'm Ed Baldwin with your weekly wrap-up for Friday, July 8th.